This was supposed to be the year that the Fed dropped the Fed funds rate 3 times. It was supposed to be the year that they bought mortgage-backed securities and lowered mortgage rates as a part of stimulating the economy. But inflation is still super persistent. Employment looks like it's at capacity, and these are just not the conditions that are gonna force the Fed to do any kind of stimulus. And so if you are somebody who has been waiting on the sidelines for lower rates, it looks like you're gonna have to keep on waiting, because it doesn't appear that rates are gonna go down, at least in the foreseeable future. And so I wanna talk about what that looks like should interest rates stay in the mid-7s, and what the true cost of waiting is. Hi guys, my name is Lizy Hoeffer. I'm a residential loan officer, cross-country mortgage, and I like to teach practical money tips so that my clients can make a smart home purchase. If you're new to the channel, don't forget to like, comment, and subscribe. And if you find this information valuable, don't forget to send it on to a friend or family member who could really use the information. Now, today we're gonna be breaking down the big question of whether or not it is smart to wait for interest rates to go down before investing in real estate, and what the cost is to you or the savings should you decide to rent. And I'm gonna be using examples from our Phoenix metropolitan area, but for you, I would get with a real estate agent, and the more specific the information, the better data for you to review. So you wanna get specific on neighborhood and zip code and really compare it to a comparable rental. So apples for apples. So what would it cost you to buy a house in this area? What would it cost you to rent in this area? Because this is what's really gonna showcase how much return on investment or how much cost savings. So the data is gonna vary depending on the source that you read, but Redfin just put out an article on the median home price here in Phoenix, and they said that the median home price was $460,000 with an annual appreciation of 12.2%, which is huge when you're talking about investments for your money. Anything with a double-digit return is great. Now, if you're looking at Maricopa County as a whole, you'll see that the numbers are slightly different. I think the median home price was $445,000 with an appreciation of 7.3%. But again, very comparable to stocks. But one of the biggest differences is that real estate as an investment itself appreciates on the total value of the asset itself, and not just your cash investment when compared to things like a bond or a stock. And so I want to go over what those numbers look like, because it is a considerable savings when you're paying $2,100 for rent and you're paying $3,600 in a mortgage. I mean, there's about $1,500 that you could be applying to different types of investments should you decide to rent. Maybe you decide you want to pay down debt. I mean, there's reasons for why renting might make sense. But if we're looking at this just from a strategic position about investments, here's what we're going to want to look at. Now, I want to just talk about the investment scenario of buying a house. I'm going to use Redfin's numbers, a purchase price of $460,000. The cash investment for this scenario is going to be 5%, because that's what most home buyers put down. And we're going to assume for this scenario that the seller paid for the closing costs, because that's a negotiable condition that's very consistent in this marketplace for the market conditions of today. Now, the loan amount in this scenario is going to be $437,000, and we're going to assume an interest rate of 7.5%. The mortgage payment's going to be $3,621, and the home appreciation, let's say it's 5%. Right? Because that's a national statistic for a stable market, and we can't always guarantee double-digit appreciation, even though that's what we've seen for a long time. When you compare those items to a stock, right? Typical stock return on investment is anywhere between 7 to 9%. We're gonna say a moderate risk portfolio is somewhere around 7%. Your initial investment, again, $23,000. And we're gonna compare it to a bond investment, again, same $23,000. And most bonds are somewhere around like 3 to 4%, but we're gonna say 3% because that's typical for the more conservative bonds. Now, when comparing investing, you have to look at a long-term trajectory like 10, 20, 30 years, because markets aren't always stable. You can't consistently, predict the rate of return on investments. And so because you want to account for volatility, I recommend looking at no less than a 10-year comparison. Now, when you're looking at stocks as a comparison, assuming you could put $23,000 in and keep it apples to apples, you're going to get at 7% appreciation, a net return of $22,259, right? Because the value of your stocks after 10 years would be $45,259, and we're going to minus our initial investment of $23,000, right? That's how you calculate that rate of return. If you look at a bond, right, for a 3% return after 10 years off of $23,000, the value is going to be $30,796. And the net gain there after you subtract your $23,000 is going to be $7,796. Neither one of those are going to compare to your cash investment when it's appreciating in real estate, because it is going to appreciate on the total value of that property of $460,000. So after 10 years with a 5% appreciation, the real estate investment is worth $746,215, which is an equity gain of $309,215. So the key takeaways here, guys, is that real estate, not only does it have much greater returns, it offers you the utility of living in the property, not to mention it involves forced savings plan because of the principal reduction payments. Stocks provide a really consistent high return. And if, let's say, you do not want the financial responsibility of owning a property, you don't want to deal with maintenance, you want to be able to be flexible, I mean, this is another really great place to put your money. So because bonds offer lower return but higher security, they're typically used to hedge risk on a portfolio. And so they require a lot less management, but they're really just there to manage the overall value of an asset. They're not really there to appreciate when compared to a stock or a real estate investment. They're there really for people who are scared of risk. And so I definitely wouldn't think that it's a comparable investment to a stock or a real estate portfolio, but it is a place to put your money to protect you, and it's a way to combat inflation depreciation. So I want to do a comparison between rent and buying, because it is a considerable difference when you're looking at the median rental price being $2,095 versus a scenario where you're buying a $460,000 house with a 7.5% interest rate with a 5% down payment. That payment's $3,621, and that's a $1,524 difference in monthly payment. And that is considerable when you're factoring in debt reductions or you're factoring lifestyle. And, you know, there's also the added cost of maintenance when you're a homeowner. So there are advantages to definitely renting. But if you're looking over the long-term trajectory, renting your house, your rental payments go up about 3% a year. And so after 5 years, that $2,095 monthly payment is now $2,430. The mortgage payment stays the same. And when you are comparing a rental payment versus a mortgage payment, there is a portion of your monthly payment, again, that goes into principal reduction, which is like that forced savings account. So every month you're accumulating a little bit of savings, and all of your rent goes to paying your landlord. Now, if you were going to compare that, right, your rental payments and savings to the appreciation, I mean, it's really not comparable. After 5 years, somebody pays like $137,000 in rent. And when you are considering the appreciation on a house, right, for that, I mean, considering that you are making $23,000 a year, I mean, just the appreciation let alone is the reason why you wouldn't want to rent. I mean, they completely cancel each other out. And after 10 years, I mean, the amount of money that you would be paying in rent is almost comparable to the amount of equity that your property would have gained. I just think that the overall winner for the long haul, if we're just talking about return on investments, is always home ownership, regardless of whatever the interest rates are. I understand that there are people who are going to say, oh, she's so biased because she works in real estate. I am biased because I invest in real estate and I also work in real estate, and I wouldn't do this if I didn't think that it was the best type of investment. But I'm only giving this advice if it makes sense for your budget, and that means that you can safely afford to live your lifestyle, that you can save and you can pay down debt, and you aren't going to be putting yourself in a situation where you're going to feel house poor or you're going to be subject to a potential foreclosure should you have, like, you know, a car maintenance issue or a property maintenance issue. So I'm only recommending this if you can safely afford and qualify now. And there are a variety of different strategies. If you find yourself not in a position to purchase a loan, you can buy with a family member, you can buy with a friend. I mean, my very first property I bought with my brother. I also bought my last property in 2022 when rates were high and they thought the market was going to crash. So from an investor standpoint and from somebody who helps other people invest, I truly believe that there is no other investment like real estate, and nothing compares to the returns that you get despite the interest rates. So if you are somebody who is holding off, waiting for a better time, the cost of waiting is very, very high. And as we know with most things, it's time in versus timing that pays off the most. I hope you found this video helpful today, guys. Don't forget to like, comment, and subscribe. And if you like the channel, guys, don't forget to send this off to friends or family that could use this information. Until next time.